Okay, what is real estate? I'm still talking about value chain and supply chain. Don't recap the other discussion I had the other place. Let us be, my brother here is in real estate. What is actually real estate? What is it? You see, guys, what I'm talking about, value chain, supply chain. Real estate is what? Do you know how many areas you can play? Number one, you can be a developer. You can be a large seller and buyer. You can be an agent. You can be a tech person within real estate. You can be a manager of other people's businesses or establishments. You can be a supplier of construction of materials. It is a huge play. Now, let us take some subcategories. Now, you say, oh, I'm a developer. Developer of what? And why did you decide to go there? You can develop a flat. Then, as you develop a flat, where? My brothers and sisters, I'm asking you these questions because I know I'm one of you. We don't ask ourselves these questions. You build a flat because I was given a plot by my father. You build a flat because the circle I belong to was selling plots in Kitegera, so I bought. I am building a plot. Why? You know, in our local shopping center, there are no plots. Why are you building a plot? I am building one in Siaya because I come from there. You don't do business because you come from a certain place. You do business to make money. So let's go back to real estate. You say, I'm a developer. What are you developing? Or what can you develop? You can do a residential flat. Okay, where? All these questions must always be answered by, where do I get optimal returns? So you are building a flat. Where? I have a plot in Githurai. I have another one in Roiro. I have another one in Gong Road. Why are you developing in that specific place? You need to engage your mind and do some empirical, figure-based, data-based decision making. Higher. No, I'm building a commercial property. What is commercial to you? Shops? A mall? What is it? Why specifically that one? What else can you build? You can build actually a data center. The biggest force of real estate in the world will be in data centers. Why? AI uses 8 times energy or power that a generative AI like ChatGPT uses 8 times of energy than the normal search engines use. So what does that mean? Out of AI, the world is in need of data centers. That is why you see in the US, all the multi-billion companies, almost all, are investing in humongous data centers. My good people, that is still real estate. So whatever you are doing within real estate, why are you doing it? You need to ask yourself that question and provide answers. Within real estate, again, I'm an agent. Agent of what? Connecting a buyer and a seller. Why can't you be an agent of materials? Because an agent is an agent. Or a broker is a broker. Why must you always do lad? How long does it take to actually close one transaction? Okay, you can play around margin. Oh, it's higher margin. Okay. How long actually does it take to close a large business? To sell one as a freelance agent? Ask yourself these questions. Now, there is something else you can do within real estate. A contractor is also within real estate. Contractor of what? Now, that is where I find it very amazing. We all know that being a contractor ni kujenga mawe. Most of us. Building works. Do you realize that is the lowest margin you get in construction? In constructing a house, the smallest margins are actually in brick and mortar. They are actually in building where we contractors are. And you know contractors is a big name, eh? They drive big cars. But that is the lowest margin there is in construction. Now, when you are a contractor. You are a contractor of, we are still in real estate, not even roads or anywhere else. There is plumbing work. There is electrical works. There is interiors. Within interiors, there are subcategories. There is floorings. There is curtains. There is ceiling. Different category of people doing separate works. Now, where do you need to play? That is, I am igniting ourselves and our mind. So that when you say, I'm in real estate, don't just jump. Just do some analysis. Where can I actually catch in with margin? Somewhere that is less explored. All of us here have, those who have done some construction anywhere, including own house, know one thing. There are very few people who have been able to structure themselves as a plumbing company. That is experienced everywhere. So you get an individual, you are always dealing with an individual plumber. I always see that as a very good business. I don't know why no one or not many people have thought about professionalizing that area alone. So that as you build a house, you may end up just doing plumbing, nothing else. And very high-tech. High-tech meaning very good quality job. Not very many people have structured themselves as such. Electrical works. There is the big electrical contractors, but there seems to be a gap in here. There seems to be a gap in here of electrical contractors who can deal with our problems, a non-house or a small flat or the other area. Now, I want to jump many things because some are related and go to one area. I'm still about thinking. Companies call for AGMs where people meet, but before the AGM, there are so many other preparatory meetings in companies. This sub-board meeting to check this and that and that. You are an institution, you as a businessman, because the biggest resource of entrepreneurship is the entrepreneurial instincts or mind. You as an institution, do you ever call for your own AGM? You. Not for your company, your own AGM. When do you sit down to actually think and track progress? You call for an AGM? Yes, this year has been this way. Kenya Power was releasing their end-year results today. So they are telling shareholders, this is what you've been able to achieve. Do you report to yourself what you have been able to achieve for the last quarter, for the last half of the year, for the last 1 year? Just sitting down, yes, this is my business. I think I am doing well, but when you do the math, you realize you're actually not doing this well. You do business, you touch so much money, but so much money is stuck in receivables. So you think you're doing a very good business, but you're actually offering service, you're not in business. There's a difference. You may be offering service, offering PA systems, offering MC jobs, but you're offering the service. You're not in business because all your money is stuck in receivables. Do you ever sit down to evaluate that? Those people who are in contractor, I mean, there is one business that I think is now being overtaken by events in Kenya. Contractors around government. Because it's a very subjective business. It relies on patronage. It relies on the person you know. Can you just try to see in your mind the biggest contractor you knew building roads in Kenya, and especially indigenous ones, you knew 20 years ago who are still in business or doing as well? So is there a better way to predict the future than by the past? So always when you're venturing into a business, I'm highlighting the ones I hear every time. Everyone is telling you, I want to be in real estate, agribusiness, nataka tender, so that we try to also think about other things we can do. Let me conclude by investments, because the time is up. Just investments. Watu wa biashara, whatever umechukua hapo, chukua. If you are not being able to gear anything, I think this was not your meeting. But I apologize. Maybe the next one will be now before you. Now, on investments, nimejump vitu kadhaa because I also don't want to tire you too much. when you are thinking about passive investments, you may have heard me talk about shares somewhere else, because I do a lot of that, investments, both in private equity, venture capital, and also buying and selling of shares, but not as a trader, but as an investor mostly. The difference is that a trader will trade for margins. An investor will buy for value. So you do an analysis of the company. When I'm buying even one share, I am buying the entire company in my mind. I always ask myself, if I'm to buy this company, not a share, would I buy it? Before I buy the share, that's the question I first get to have an answer on. So what you need to do when you are evaluating which investment in a passive manner to invest in, first of all, there are very many categories. Fixed income, there are shares. Fixed income are like bonds, treasury bills, and etc., where you are guaranteed. But everything that you are guaranteed also comes with a very retro margin or very retro yield, because you are risk averse. So being risk averse means you take the gain equivalent to a risk averse person. When you have a higher appetite of risk, when the reward comes, you also get rewarded adequately, incommensurate to your risk. But what I look for myself in investments across large T-bills, shares, private equity, number one thing you have to always think about is liquidity. When you are buying land, you are buying shares, you are buying bonds, when you need the money, how soon can you get it? You know, maybe some of you can relate. This Kenya is full of people full of wealth. Wealth, niko na shamba ya eka 200, 200 acres, 2,000 acres, niko na hii. Okay, fine. You've told me how much it's worth. When can you get it? When can you get it? Liquidity is always a very critical thing. And me, I approach life in terms of I also need money. Because I don't think you're investing money for the next 200 years. You're investing money to help you have a good life continuously. So if you can't liquidate your money, then you have to think about it. Liquidity. How soon can you liquidate that asset you're investing in? Secondly, always do some analysis about return on equity, return on investments, return on assets, depending. Na mimi nikiangalia hapa hii hall, I don't need to go into details on that. There is something else I always look for in the NSC. I can't buy a share before I look at it, called PE ratio. PE ratio means price over earning per share. So earning per share is what? When the company announces year profits, they divide their profit by the number of shares they have. So what they get is earning for every share. So PE measures how the company is trading in the market, that is the NSC, divided by its earnings. You are able to see if the company can pay dividend the entire amount of money, how long would it take me to recover my money? Currently in the NSC, to the best of my ability, the company with the lowest PE, the lower the better. Because the lower shows the least possible time you can get back your money if you have to rely on net profits. If I buy this company, the net profit per year, how soon can I return my money? So it measures a period, PE ratio. I'm just highlighting so that you also go do your own research. Risk profile, as you invest, look at how risky a thing is. Don't delegate some of these things. You know, many times in investments, we want to, you have an